Between the U.S. policies and the increased debt with all the new money that America is printing, with the risks that the regulators allow with high leverage trading across the financial markets, with the gold-backed Chinese currency, the Petro-Yuan, that is going to allow countries around the world to buy and sell oil, there's a lot happening across the world that affects the traditional fiat systems in the new Bitcoin and blockchain technology with all the digital currencies that we know. This creates a really interesting situation as power law shows us the relationship between large quantities, large networks, and the shifts that can happen with these huge black swan events. And if you're holding any cryptocurrency at all, are you going to be part of the new 1%, or how do those numbers lay out? Let's discuss. Hey everybody, I'm Gary Palmer Jr., you're you, and together we are Minting Coins, your trusted source for crypto news, interviews, and ICO reviews. Thanks for showing up. Tap that like button. It really supports us and it helps other people find this content. Also, if you have any questions or comments, leave those in the comments box below so that your voice is heard as part of the community. As the footprint and the links between the rest of the financial system start to take hold and integrate with crypto assets are going to pose increasing dangers to the fiat systems around the world for money. And according to Christine Lagarde at the IMF, crypto assets have the potential to magnify the risks of high leverage trading and to increase the transmission of an economic shock as they become more integrated, as crypto becomes more integrated with the traditional financial products around the world. At the same time, as the oil industry has revolved around the petrodollar since the 1970s, it's now expected that the Petro-Yuan from China is going to take up $800 billion worth of trading away from the petrodollar. And China is the largest crude oil importer around the world. They may have enough leverage to unseat the US dollar, and are going to be doing this with the Chinese yuan as it's a gold-backed currency with gold-backed futures. And additionally, if oil exporters become dependent on the new Petro-Yuan instead of the petrodollar, it could be really devastating, a devastating blow for the US dollar around the world, causing economic shock. And this economic shock could, really lift up gold prices and Bitcoin prices, and at the same time really hurting the dollar and people around the world and Americans and people inside the country who are really dependent on the dollar. And these risks of high-speed trading around the financial system, these risks of the gold-backed yuan in China, is all happening at the same time that the United States is printing another $1 trillion in the economy. And it just sets up a very interesting situation for Bitcoin versus the US dollar and these systems, which could really create massive transitions of wealth and money of different forms and how this money is transitioning across the world. It could be like a digital run in the banks, and then people will be left wondering how much of their wealth is still real when it's formed in dollars, and how much of their wealth will still be real when it's formed in Bitcoin. And currently, when we look at the number of addresses in the world, the number of wallets that have certain amounts of Bitcoin, how is that distributed? How is that long-tailed out across power law? And how much would it take for you to be in the top 1 percentile of the Bitcoin holders in the world? Well, we're going to be taking a look at that, a look at all of that news that we mentioned a little bit more, and let's discuss. So here we have the evolution of industry experts. In the year 2000s, we had the people with the suit and ties, the web strategists. I guess I still wear the long sleeves. And then in the new millennia, we had the social media experts with the hoodies and the backpacks. And now we have the cryptocurrency and blockchain evangelists, which have their own style, as we've been seeing throughout the world. So in the first article, we see regulators continuing to pick up the pace. We see out of Bitcoin Magazine that the New York Attorney General is launching inquiries into the cryptocurrency exchanges that are operating in New York State. So the Attorney General, Eric Schneiderman, has sent letters to 13 virtual currency exchanges requesting disclosure information about their operators and how they hold onto people's money and some of the processes that these organizations have. What he says he's seeking to do is to increase the integrity of these virtual markets and really just add additional regulations, which is probably going to push out some of these crypto exchanges out of the market. It's going to make fewer exchanges, and that's going to be really interesting in how that affects the price as people have less options to purchase these different currencies and they add additional regulations. Eventually, will they make it so you have to be an accredited investor to buy Bitcoin, or will anyone be able to buy Bitcoin? It's going to be really interesting to see how this progresses. Some of these exchanges include Coinbase, Gemini, Bitfinex, and Poloniex, as well as 9 other exchanges with this 3-page questionnaire. We'll have a link to the questionnaire in case you wanted to see what all of these specific questions were around the ownership and control, the basic operation and fee questions, the trading policies and procedure questions, how they deal with outages and other suspensions of trading, internal controls, privacy and money laundering, and protection against risks the customer funds, as well as written material. So it's really interesting to see these 34 questions, and you could go over there, pop over there, take a look. But in conclusion, according to this one lawyer in Washington, D.C., known for his work in the crypto space, Stephen Pauly, says that he's not surprised to hear of the New York Attorney General's initiative, but at the same time, he views it as a grim sign of what's to come. Mr. Pauly says that this is just the start, and there will be a major onslaught, and it will shut down a branch of exchanges from the United States. So he says he's going beyond New York in this quote, and he's saying that this is going to start to shut down exchanges across the United States, making fewer exchanges for people to be able to purchase crypto through. And it's going to be really interesting to see how those laws progress, and if it allows for the growth of the blockchain industry, of the blockchain network, of people to participate in this economy, or if it really restricts people and forces people into perhaps a different type of crypto. If the United States does decide to have its own Fed note or its own Fed coin, then will people be guided to purchase that instead of Bitcoin? In the intro, we talked about the US dollar. We talked about the challenges that the US dollar is facing. And as many of us are aware, the dollar's 70-year demise is slowly coming to an end, according to some people. And what we understand is that the US dollar hasn't been backed by gold since the 1970s. Also, since the 1970s, the US dollar has been used as the reserve currency to buy and sell oil. But, overall, the dollar has decreased 30% in purchasing power since the year 2000. It's lost 96% of its value since 1913. And according to the numbers, on average, the US dollar is devalued by 50% every generation. And so we have this graph right here, and we can see how this is showing the purchasing power of the consumer dollar from 1913 to 2017. And this is not a good direction. This shows how the dollar has gone from essentially 100% purchasing power and has decreased over time, and it's now worth 4% of what it was before. And we've seen this before. In Roman times, there's the examples of the coins being 100% silver or nearly 100% silver, and then over time putting less and less silver in those coins. And so eventually that economy crashed, that civilization crashed, and then something new was started over. And so now in the year 2018, 2019, 2020, as we get further and further down this road and there's less and less space for us to squeeze out of, what will be new for us? What will be after the dollar, if there is something after the dollar? And what we know about besides the dollar is Bitcoin, and what we know besides the dollar is gold, and what we had before, which was the gold standard. And if the gold standard was ever to be reinstated, control of the dollar would revert to free market forces instead of the whims of the Federal Reserve. And with the free market forces, the amount, who has gold in the world, and the amount of gold that they have, and the limited supply of actual gold in the world would be very interesting in how that value would and could appreciate if the reliance on the dollar was not there, if the power of the dollar was offset by all of these different factors or any of these different factors that we're talking about. And that brings us to what is the Petro-Yuan. And we have oil exports. We have Saudi Arabia, who is selling oil, and currently everyone around the world is buying and selling oil with petrodollar. And that was true up to very recently, when now Saudi Arabia can sell its crude oil in petro-yuans, which provides a lot of opportunity for China, which is the largest oil importer around the world, to be able to have their imports and exports dependent on the petro-yuan instead of the petrodollar. And this could be devastating to the dollar if this happens. All of these countries wouldn't need to hold on to these dollars to buy and sell their oil to meet their energy needs, and they would be able to take those dollars and dump more of those dollars onto the market. And then if more dollars flood the market, then what does that do for all of the dollars that you have in the bank? Well, it makes those dollars worth less. So in the background, in addition to the petro-yuan, China has been quietly building up its gold reserves for years, and they have plans to ultimately fully back their Chinese currency with gold, going on a gold standard for their fiat currency. And who knows, maybe they'll have a crypto petro-yuan. You might as well throw all three into the mix and have a triple home run, perhaps, at least in terms of the marketing. So it's just interesting every time we hear about President Trump talking about tariffs on China, and we see China really building up their gold. Additionally, we see Germany building up their gold. We see the National Bank of Hungary building up their gold. We know JP Morgan Chase, we know Russia, we know lots of large organizations and countries around the world have building up their gold reserves. And it's just interesting to see the precious metals play. At the same time, we see the cryptocurrencies play. So one of the interesting aspects about cryptocurrency and why we are really focused on cryptocurrency is the new relationship of this technology to the rest of the world. And this new technology and its diffusion of information and innovation throughout the world in these really early stages, these really early steps that we're in right now. And so if we look at the growth of the technology, if we think about how technology usually takes hold, it takes hold in the form of an S-curve. Sometimes it's a bell curve, and other times it's technology that really takes off, like cell phones or like the internet, and we get closer and closer to 100% of the world using this technology. And, granted, we're not there yet with the internet, and we're not there yet with cell phones, being at 100%, but few things are rarely either 0 or 100%. But when we look at Bitcoin and we look at the information, we look at the number of transactions increasing, we look at the number of miners around the world and the hash power increasing, we see the number of Bitcoin wallets increasing, we see the use cases increasing as there are issues with the traditional financial system, traditional monetary policy, traditional totalitarian governments around the world. People see a lot of use case for Bitcoin and for blockchain technology. So yes, while Bitcoin could go to 0, Bitcoin could also become widely regarded as a safe and stable network for people to relay both information and money. But in this really early stage of the game, these early steps of the process, while the Bitcoin blockchain, this is still beta technology, this is still beta software. They haven't released the full product yet, and people are just throwing billions and billions of dollars at this test case of code and tech. And people are having a blast playing with crypto kitties and all of these really cool ideas. The hardcore developers for these blockchains, let it be Bitcoin or Ethereum or some of these other, really interesting projects that are really focusing on actual utility, these developers haven't even created the full release product, which is going to allow people to accelerate usage of virtual currency and blockchain technology for an array of different applications, some of which we've been talking about over time and many of which haven't even been thought of yet. And so with that, where are we? We have the innovator stage, we have the early adopter stage, we have the early majority stage, we have the late majority, and then the laggards, the people who will refuse to ever use text messaging, or the people who will refuse to use the internet, and those people will always exist, right? Well, where we are right now is still in the innovator stage. We are barely at the early adopter stage. And in our opinion, we won't be at the early adopter stage until some of these banks jump in and some of these hedge funds are able to expand and some of the technology really hits the mainstream news. That's when we hit the early adopter phase, when there's really more applications for people to get into it. The internet wasn't interesting until Web 2.0 came around and we started having chat, we started having more visual components, more audio components, more video components. It wasn't really until eBay was bringing us services and MySpace was bringing us connection and people were really able to lift up that level of engagement. And that's way beyond when the internet actually started. So earlier in the show, when we were talking about the New York Attorney General who is starting to put pressure on the crypto exchanges, that's happening over here. When we're talking about the current regulators and the high-speed financial transactions, the high-speed leveraging, when we're talking about the socio-economic conditions around the world, when we're talking about the Chinese Petro-Yuan, all of that is happening right in here. And so if there's any sort of major event, if there's any sort of worse than expected downturn in the economy, if there's some sort of black swan event that people aren't prepared for, that is, just creates a really jarring effect that really, shakes the confidence in the US dollar or in the economy overall, all of these different events could get compounded and could create this chasm sort of event that pushes people over into this technology, and then it could accelerate exponentially, which is what a lot of people are talking about. And then you sort of see this hockey stick curve with the adoption rate of the technology. And then in the cases of tokenization with the Bitcoin token or some of these major cryptocurrencies that have absolute value, we could see the value of those tokens increase exponentially as the number of users increase. So this takes us to where we are now from this Bitcoin wealth distribution chart that we found on the internet. And just like we would imagine to see in some sort of power law dynamic, the majority of people are at this end of the curve, or at the 80% end of the curve, and then you have 20% of the people who just have much more. The old 80-20 rule. So we'll leave this link in the show notes for you. But real quick, the top 1 percentile of the Bitcoin address holders have a minimum of 15 Bitcoin inside those addresses. And what we're seeing is that there's a few 100,000 people that are in that top 1%. But if we just scroll down this list, if you were someone who had 1 Bitcoin, that 1 Bitcoin would put you in the top 10 to 15%. If you were in that 10 Bitcoin club, then you'd be in the top 2%. But if you had a half a Bitcoin, then you're still in the, about the top 20%. So if you have a tenth of a Bitcoin, that puts you in the top 35%. And even if you have 1 millibit, then you're still in the top 90% of all the people in the world who have any amount of Bitcoin. And if you're in the top 100% of the people in the world that have Bitcoin, then you're still in this innovator stage of all the people in the world. And this is a huge risk, and with a huge risk comes a huge reward with what could happen with the 1% that we can afford to lose. And if it's that 1% that could save us in some sort of event that some of us can foresee or that we can't possibly even imagine. And ultimately, it's a catch-22, which is going to happen first. So the adopter is going to purchase lots of Bitcoin, and then the banks and the merchants are going to want to accept it, or the banks and the merchants going to want to accept it, and then the price is going to go up, and then all the adopters are going to want to purchase into it. We just see the adoption increasing. We see it going in a major direction. We're seeing here Barclays, the second largest bank in the UK, is thinking about starting a cryptocurrency trading desk. It's weighing the possibilities, the risks and rewards for them to get into it. They probably don't want to be left behind. And Barclays knows that there are an increasingly number of hedge funds, organizations that have huge amounts of money, and their only purpose is to increase the amount of money that they have. They're increasingly interested in trading cryptocurrencies, providing this growing client base with massive investments for investment banks to carry out these cryptocurrency trading platforms. So there's a lot of hedge funds that really have a demand for cryptocurrency. They need the banks to get in. The banks want to increase their profits. They realize that there's this tappable market with the hedge funds. It really creates a catch-22 that pushes cryptocurrency in an upward trajectory. So at the same time as all of this is happening, we have the IMF's chief, Lagarde, Christine Lagarde, who says that Bitcoin could have a significant impact on how we save money. So Christine Lagarde, the managing director, says that crypto could have a significant impact. She goes on to say that crypto assets that survive the coming crash of cryptocurrencies could have a significant impact on how we save, invest, and pay our bills. It's very bullish. It's a very bullish sign for cryptocurrencies coming from this particular person who's a part of the traditional fiat system and global regulators. She goes on to say that policymakers should keep an open mind and work toward an even-handed regulatory framework that minimizes the risks while allowing the creative process to bear fruit. And this is exactly what we were talking about in terms of the New York Attorney General, who's launching their inquiries into the cryptocurrency-related exchanges. And so we're hoping that within New York State and within the United States that we have regulations that really allow for creativity to blossom, that allows usage to grow, that allows everyone to participate in this new world economy, this new world technology, while minimizing risk from the actual bad actors. But her promising bullish words don't come without any warnings. And what she goes on to warn us, what she goes on to warn other regulators around the world, is that while their preliminary assessment is that given the still small footprint and limited links to the rest of the financial systems, these crypto assets do not pose an immediate danger. And really tampering down the fear of risk currently that may exist on what is the crypto event horizon. But at the same time, she goes on to warn that regulators should remain vigilant because crypto assets, she admits, has the potential to magnify the risks of highly leveraged trading and to also increase the transmission of economic shocks should cryptocurrencies be integrated fully into the mainstream financial products. And so if there was an economic event, a black swan event, then there could be some sort of mass exodus of fiat currency, of fiat wealth that could exit the system, making the problem even worse, but at the same time blowing up cryptocurrencies and making them skyrocket in both usage and value. And then at that time, would we see an additional application of the power law, which is that functional relationship between these massive quantities, the massive amounts of money, wealth that are proportioned in dollars versus the massive amounts of wealth that are proportioned in other currencies, let it be the Gold-Backed Yuan, or let it be Bitcoin, or let it be Ethereum, where we may see this relative change in one quantity as a result of the proportional relative change in the other quantities that we are dealing with these different traditional assets and these new assets at the same time. So there you have today's show. There's a lot of information with the regulations that are coming down in New York, regulations that are being talked about around the world. There you have a lot of information about the gold-backed currencies around the world. Let it be what we did have with the US dollar, which had shifted into the petrodollar, and now this Petro-Yuan, which is now rebacked with gold. What do you think about all that? What do you think about these regulations? What do you think about more and more banks getting involved? What do you think about the risks to the dollar because of the leverage trading that's happening around the world? These risks that are happening with people's money, or what's happening with this sort of trade war conflict between Trump and China, and what China's doing with this gold-backed yuan, and if this gold-backed yuan, this petro-yuan, is really able to take a disproportionate share away from the petrodollar, with that flooding of US dollars into the market, will we feel those effects in ways that are widely noticeable and palpable by the majority of people in America. Let me know what you think with all that. Feel free to share those comments in the box below. You know, tap that like button, subscribe if you haven't. And I'm glad that together we are minting coins.